Morning one and all. In the previous class, you have seen the formulas for estimation of current assets. In this class, you are going to see about estimation of current liabilities. So, first formula is production in units into raw material cost per unit into credit period allowed by creditors by 12 months or 365 days. For direct wages, the formula is direct wages budgeted yearly production into direct labor cost per unit into average time lag in payment of wages, whether it is in months or days, divided by 12 months or 365 days. And for overheads, the formula is budgeted yearly production into overhead cost per unit into average time lag in payment of overheads by 12 months or 365 days. In this way, you are going to estimate the current liabilities. And now, make a note of pro forma here for calculation of working capital. You will be having the estimation of current assets first. So as you all know that current assets includes cash and bank balance, inventory and debtors. You might be having the cash balance or you might be having the bank balance. It is one of the component of your current asset. And you are going to have the inventory. Inventory comprises of three parts: raw material, work in progress, finished goods. All these together are called as the inventory. It's one of your current asset. And debtors. Debtors are one more component of your current assets. So, all these together are called as your total current assets. You can represent them with A. And next, you are going to have the estimation of current liabilities. Current liabilities includes creditors, wages and overheads. All these together are called as your current liabilities, total current liabilities. Now, A minus B, that is total current assets minus total current liabilities, will give you net working capital. And for this amount, you have to add the margin for contingency. The firm keeps some proportion for meeting any contingent expenditure. So, you have to add that margin for contingency to net working capital. Then you will get the net working capital required. This is the way how you calculate the working capital requirements of the firm. And now you are going to see about the working capital management. Working capital management can be done in three ways: management of cash, management of receivables, management of inventory. We'll see one after the other. First, you are going to see about cash management. Cash is considered the important asset because for any firm, its activities or running its operations are based on the cash. Now, objectives of cash management. Whenever the firm has to pay for the wages, or when they have to pay the salaries, or when they have to pay the taxes, or when they have to purchase anything, then for all these, cash is essential. So, proper cash management has to be done by the firm. And one more objective is to reduce the cash balance, means the firm has to maintain the required cash balances, neither excess nor low. And it has to ensure that it is having the sufficient cash for making purchases of inventory or for any other purpose. And this cash management helps the firm in planning for the capital expenditure, means to buy any fixed assets or to buy any assets for the organization. And this cash management helps in planning for the financing functions, means providing the finance for any other outside resources or for outside people. And this cash management helps the firm to organize their investments, whether it may be the short term investments or the long term investments. The firm requires cash to invest. And functions of this cash management. So, these cash management functions are cash planning, planning for the cash to be maintained in the organization, and then managing the cash inflows and cash outflows, controlling cash flows, and optimizing cash level, and investing the idle cash in different avenues. And next comes your receivables management. Accounts receivables are the amounts which are owed to the organization by its customers. So, the firm receives the cash from the customers for conducting sales to them. And the objectives of this receivables management are: this receivables management will promote the sales and profits and gets the return for the investment to the organization. It obtains the ROI for the organization. And one more objective is to see that it minimizes the bad debts, it minimizes the collection costs, and it minimizes the opportunity cost for the organization. And when the firm is having the proper receivables management, they can enhance the quality of sales of their organization. And this receivables management can help the firm to have the better market share and also helps the firm to increase the profits. And one more component of working capital management is inventory management. Inventory includes the raw material, work in progress, and finished goods, stores and spares. The objectives of inventory management are to hold the inventory in order to meet the firm's requirements or the demand. And one more objective is to minimize the unproductive inventory. Unproductive inventory means which is of no use for the organization in their production activity. So reducing the carrying costs, reducing the inventory which is not giving the productive use for the organization. These are the objectives of inventory management. Motives of inventory management. One of the motive of inventory management is transaction motive. Means here the firm need to hold the inventory in order to carry out the production and to produce the goods as per the requirements of the customers. That is one motive of inventory management. And one more is precautionary motive. So there could be some unseen or unforecasted situations for the firm, like strikes or some transportation problems or some unavailability of the materials and all of this. In order to avoid these problems and stoppage in production process, the firm has to hold the stock in the precautionary motive. And one more motive here is speculative motive. As you all know that speculation means buying low and selling high. So here the firm will be availing the discounts, and whenever they know that the price is going to have a hike, or when they expect the price hike, or they are going to go purchase the quantities in bulk because they want to avail the discounts here. In all these situations, the firm will be holding more amount of inventory than that of their requirements. This motive is called as speculative motive. So these are all the motives of inventory management, and by managing the inventory properly, they could be having the better profits and better operations. So as a whole, working capital management involves three aspects: cash management, receivables management, and inventory management. So this is all for this class. Thank you.